Bawat kamay ang pangarap sa edukasyon para sa lahat. Sulong Edukalidad. Ito ang Department of Education School on the Air, sumasahing papawid sa DXPB 106.9 Radio Pilipinas, Member KBP, kapisanan ng mga broadcaster ng Pilipinas. From the division of Zamboanga del Sur, here is Radio Sure sa Sur, broadcasting for the School on the Air in the course Fundamentals of Accountancy, Business and Management 1. Good day, our lovely learners in Fundamentals of Accountancy, Business and Management 1. My name is Robilyn Daguhoy Amit of Malave Vocational Technical School at your service. We are happy and pleased to be with you today through our School on the Air program. This is actually an alternative to cope with the changes brought by the pandemic, and this is now part of the new normal. So let us smile and embrace it. How are you today? Make sure that you are tuning in our local radio station. You may invite your friends, but still keep social distancing. So together, we listen and learn as one. Everybody is reminded to stay at home and please be safe. Always wash your hands and wear your mask when talking to people and observe social distancing to keep us away from the novel coronavirus, who badly changed the lives of the people around the world. To set the tone right, I would like you to get your module and get ready for our lesson for today, which is the 5 major accounts. Please get ready now, because any moment, our radio teachers will be presenting their lesson. Kindly prepare your pen, notebook, and module and snack if you have any. Students, are you ready? If you are ready, here are the Senior High School ABM teachers from Malave Vocational Technical School for Fundamentals of Accountancy, Business and Management. What I know. Good morning, Senior High School students. I am your radio teacher, Miss Robilyn Daguhoy Amit. Today, we will discuss Module 5, Fundamentals of Accountancy, Business and Management 1, Alternative Delivery Mode, ADM, Module on the 5 major accounts. After going through this lesson, you are expected to: Number 1, discuss the 5 major accounts. Number 2, cite examples of each type of account. And number 3, prepare a chart of accounts. Kindly get your pen and notebook and let us start now. This module was designed and written with you in mind. It is here to help and guide you in understanding the 5 major accounts. The scope of this module permits it to be used in many different learning situations. The language used recognizes the diverse vocabulary level of students. The lessons are arranged to follow the standard sequence of the course, but the order in which you read them can be changed to correspond with the textbook you are now using. Let us have have your starter activity. Kindly turn your module on page 2, activity 1. What I know. Write your understanding of each word inside the box as provided in your module. You will be given 1 minute to write your answers in a graphic organizer in your notebook. Are you finished on your first activity? That's good! Now, please continue answering your activity on the same page of your module. On a clean sheet of paper, enumerate the items required for each question. Number 1. Inside your house, what do you see as assets? Enumerate 5 items. Number 2. When one puts up a food catering business, what do you think are the items that need to be purchased? Enumerate 5 items. Write it on your notebook. You are only given 2 minutes to answer. You can do it, students. Are you now done? Great job! Now, please set it aside and your teacher will check your work once you return your module and submit to your activity notebook. What's in? The basic summary device of accounting is the account. A separate account is maintained for each element that appears in the financial statements. An account may be defined as a detailed record of the increases, decreases, and balance of each element that appears in the entity's financial statements. Students, please open your module on page 3. Identify as to what account does each item belong. Check the box that corresponds your answer. You have 2 minutes to answer and write it in your worksheet. Are you done, students? Very good! This time, let us now discuss about the 5 major accounts. Kindly open the page 4 on your module. Are you ready, students? Let's begin. The 5 major accounts. Let us start with number 1. Assets are the resources owned and controlled by the firm. Number 2. Liabilities are obligations of the firm arising from past events which are to be settled in the future. Number 3. Equity or owner's equity are the owner's claims in the business. It is the residual interest in the assets of the enterprise after deducting all its liabilities. Number 4. Income is the increase in economic benefits during the accounting period in the form of inflows of cash or other assets or decrease of liabilities that result in increase in equity. Income includes revenue and gains. Number 5. Expenses are decreases in economic benefits during the accounting period in the form of outflows or depletions of assets or incurrences of liabilities that result in decreases in equity other than those relating to distributions to equity participants. Assets. It can be current versus non-current assets and tangible versus intangible assets. Current assets are assets that can be realized, collected, sold, used up 1 year after year-end date. Examples include cash, accounts receivable, merchandise inventory, and prepaid expense. Non-current assets are assets that cannot be realized, collected, sold, or used up 1 year after year-end date. Examples include property, plants and equipment, furniture, building, land, and long-term investments. Tangible assets are physical assets such as cash, supplies, and furniture and fixtures. Intangible assets are non-physical assets such as patents and trademarks. Current assets. We have cash, is the money on hand or in banks and other items considered as medium of exchange in business transactions. Accounts receivable are amounts due from customers arising from credit sales or credit services. Notes receivable are amounts due from clients supported by promissory notes. Inventories are assets held for resale. Supplies are items purchased by an enterprise which are unused as of the reporting date. Prepaid expenses are expenses paid in advance. They are assets at the time of payment and become expenses through the passage of time. Accrued income is revenue earned but not yet collected. Short-term investments are the investments made by the company that are intended to be sold immediately. Non-current assets, property, plant, and equipment are long-lived assets which have been acquired for use in operations. Long-term investments are the investments made by the company for long-term purposes. Intangible assets are assets without a physical substance. Examples include franchise and copyright. Now let's proceed to liabilities. Liabilities can be current versus non-current liabilities. Current liabilities are liabilities that fall due, paid, recognized as revenue within 1 year after year-end date. Examples include accounts payable, utilities payable, and unearned income. Non-current assets are liabilities that do not fall due, paid, recognized as revenue within 1 year after year-end date. Examples include notes payable, loans payable, and mortgage payable. Current liabilities. Accounts payable are amounts due or payable to suppliers for goods purchased on account or for services received on account. Notes payable are amounts due to third parties supported by promissory notes. Accrued expenses are expenses that are incurred but not yet paid. Examples: salaries payable or taxes payable. Unearned income is the cash collected in advance. The liability is the service to be performed or goods to be delivered in the future. Non-current liabilities. Mortgage payable. Records long-term debt of the business entity which the business entity has pledged certain assets as security to the creditor. In the event that the debt payments are not made, the creditor can foreclose or cause the mortgage asset to be sold to enable the entity to settle the claim. Bonds payable. Business organizations often obtain substantial sums of money from lenders to finance the acquisition of equipment and other needed assets. They obtain these funds by issuing bonds. The bond is a contract between the issuer and the lender specifying the terms of repayment and the interest to be charged. Owner's equity. Capital is used to record the original and additional investments of the owner of the business entity. It is increased by the amount of profit earned during the year or is decreased by a loss. Drawing or withdrawal is an account debited for cash or other assets withdrawn by the owner for personal use from the business. Income. Examples include service income and sales. Expenses. Examples include salaries or wage expense, cost of sales, rent expense, supplies expense, telecommunications, electricity, fuel and water expenses. Chart of accounts. Charts of accounts is a listing of the accounts used by companies in their financial records and is usually tailored to the operations of the business. It functions as a guide to the accountant or bookkeeper in ensuring uniformity and consistency in the use of all the accounts in recording business transactions. Chart of accounts is the foundation of the financial statements. It is designed to be a map of your business and its various financial parts. The chart of accounts usually includes at least 3 columns. Number 1, account. List the account names or titles. Number 2, type or account code. List the type of account such asset, liability, equity, income, or expense. Many companies also assign numbers, codes to the accounts. These are used for coding charges. If the company is using a computerized system, the computer automatically assigns the account number. Number 3, description contains a description of the type of transactions that should be recorded pertaining to the account. An example of a chart of accounts is given below. Example for asset. We have the account's title, then account code or codes may vary, then description. Now in account's title, we have cash, account code 101, and the description used for actual cash transactions. Next, we have accounts title, accounts receivable, code 112, description used for customers who will pay in the future. Next, we have inventory, account code is 150, description used for items held for sale. Prepaid expenses, account code 123, description used for expenses paid in advance. Supplies, account code 755, used for supplies to be used in the future. Office equipment, code 221, description, used for equipment that are used in the office. Store equipment, code 250, description, used for equipment that are used in the store. Land, 222, description, used for land used in operations. Unused supplies, code 122, used for supplies which remain unused at the end of the counting period. Prepaid rent, code 123, description, used for future rental payments. Accumulated depreciation, 154, description, contra asset, used to charge to depreciation expense. Now last for the assets we have furniture and fixtures, code 153, description, used for furniture and fixtures that are used in the operations. Now let's move to liabilities. For accounts title, we have accounts payable, and the code was 201, description, used for the debts of the company. Next, notes payable, code 202, used for promissory notes issued by the company. Salaries payable, code 203, used for salaries to be paid in the future. Now let's proceed to owner's equity. Accounts title, owner's capital, account code 301, description, used for original and additional investments made by the owner into the business. Owner's withdrawal or drawing, account code 302, description, used when the owner withdraws cash or other assets from the entity. Next is income. For accounts title, service income, account code 600, full description, used for earnings from services made. Interest income, account code 402, description, used for interest earned. Other income, code 499, description, used for other income. And for the last is we have expenses. For accounts title, taxes and licenses expense, account code 501. Description, used to settle taxes and licenses. Next, salaries expense, account code 502. Description, used for salaries incurred regardless of payment. Supplies expense, account code 503, used for paid supplies. Utilities expense, account code 504, used for electricity and water expenses incurred. Rent expense, code 505, description, used for rental incurred. Next is depreciation expense, code 506, description, used to charge the expense of the property, plant and equipment incurred. Doubtful accounts expense, code 507, used to expense the account receivables and collected. Interest expense, code 512, description, used for expense related to use of borrowed funds. Other expense, code 599, description, Used for other expense not included in the list. Do you understand now, students? Those are really important facts to us, especially to our ABM students. Thank you for imparting your knowledge, our dear ABM teachers. It surely broadened our ideas about these topics. Students, I know that you have already deepened your knowledge in these topics. So, in order to test your understanding in our lesson for today, kindly open your module on page 9 for the application of your learning. Kindly answer the series of activities for 10 minutes. Again, write your answers on your notebook. Do your best, students. For your final activity today, let us have your assessment on page 11 and 12. It is a 10-item multiple choice test. Choose the letter of your answer and write it on your activity notebook. You have 5 seconds to answer each question. Let's begin. Number 1. What type of account is a rental income account? A. Liability. B. Revenue. C. Equity. And D. Expense. Number 2. What type of account is the cash account? A. Asset. B. Expense. C. Liability. And D. Income. Number 3. What type of account is the income tax payable account? A. Expense. B. Equity. C. Liability. And D. Income. Number 4. What type of account is the retained earnings account? A. Equity. B. Asset. C. Liability. And D. Income. Number 5. What type of account is the utilities cost account? A. Liability. B. Expense. C. Equity. And D. Asset. Number 6. Amounts owed by the business are referred to as A. Assets. B. Equity. C. Liabilities. And D. Expense. Number 7. Which of the following is a liability of a firm? A. A building owned by the firm. B. Cash of the firm. C. Money owed to the firm by its debtors. And D. Money which the firm borrowed and not yet repaid. Number 8. Which of the following is a form of revenue? A. A check paying a mortgage. B. Credit sales from customers. C. Cash paid to creditors. And D. Amount borrowed from a lending institution. Number 9. All of the following affect the owner's equity account except A. Original investment. B. Withdrawal by the owner. And C. Additional investment. And letter D. Settlement of a liability. Number 10. Which of the following is not an intangible asset? A. Trademarks. B. Inventories. C. Patents. And D. Copyrights. Students, are you done? You surely did well. Please set your notebook and module aside, and your subject teacher will check your work once you return your module and submit your activity notebook. I hope you enjoyed the discussion. Until next time, we are your radio teachers and I am Robelinda Gohoy Amit. Thank you, students, and God bless. We just heard the song from the Department of Education, Sulong Edukalidad, because we are promoting education for all, so that no one will be left behind in chasing their dreams. Please do not forget to submit your activity notebook and module on your given schedule. Congratulations! We are done with our lesson for this course. To deeply understand our lesson today, you are encouraged to read your module during your vacant time, and please do not forget to answer the activity worksheets attached in your module for practice and reinforcement. For your questions, clarifications, or reactions, you may send text, private messages, email or call, video chat to your teacher on the contact details attached in your feedback form. Please also expect follow-up from teachers via different contact platforms. Our next lesson for Module 6 will be discussed next week. Make sure to listen to our School on the Air program every Friday 1 p.m. to 1:30 p.m. at DXPB 106.9 Radio Pilipinas. Until our next discussion, I am Miss Robelinda Gohoy Amit, your host for today. Thank you so much, students. Have a great day and God bless.